Hello, it is July the 9th. My name is David Walterman. I am an independent loan officer, meaning I can shop loans to many different banks for all the different programs that are available and competitive rates. I'm licensed in California, Idaho, and Washington. It is a great day in the bond market today. 10-year treasuries are down 7 basis points right now, and there's a rally in the mortgage bond market. Mortgage bonds are up 20 basis points at the moment, meaning banks will be repricing for the better on their mortgage interest rates. There was big news today from Bill Pulte, the head of the FHFA, Federal Housing Finance Agency, and he announced that starting immediately, both Fannie Mae and Freddie Mac will be accepting the new VantageScore 4.0. Before, it was just the FICO score that was used to determine a person's creditworthiness when it came to mortgage loans. The VantageScore incorporates alternative data points for a person's credit. They'll use things such as rent, utilities, even telecommunications. It also eliminates the requirement that a credit file needs to be at least 6 months old. Incorporating the new VantageScore 4.0 should bring the cost of credit reports down, which is a great thing. And it's estimated to bring another 5 million more eligible buyers into the market. Last week, with the slight dip in interest rates, we saw mortgage applications rise 9%, as well as refinance applications rise 9%. Just think what's going to happen if we see a half a point or a full point reduction in mortgage interest rates. Hang on. Today, I want to talk about the difference between an FHA and a conventional loan. What is better? A lot of people might lean towards an FHA loan because they are more lenient on a person's credit score and credit history. If they've had any type of credit issues in the past, an FHA loan would be more favorable. A lot of people also think that an FHA loan will have the lowest down payment requirement, but they're wrong. As a first-time homebuyer with decent credit, a conventional loan requires as little as 3% down, where an FHA loan will require 3.5% down. FHA loans will most likely have better rates, but here's a few things to consider. FHA loans require an upfront funding fee of 1.75% of your loan amount. This is not an out-of-pocket expense. It's an expense that will be added on to your mortgage. Let's say you have a $500,000 loan amount. 1.75% of that is $8,750. This amount will be added onto your loan amount and financed over the term of your loan. Another consideration is mortgage insurance premium. This is the monthly mortgage insurance that you will pay with an FHA loan. If you're putting less than 5% down, your monthly mortgage insurance will be 0.55% of your loan amount. So in that same scenario with a $500,000 loan, your monthly mortgage insurance will be $229. You're adding that onto your mortgage payment every month. And if you're putting anything less than 10% down on your home, that monthly mortgage insurance will stay with you for the life of the loan. If you're putting 10% or higher down, that monthly mortgage insurance will drop off after 11 years. Now let's talk about the conventional loan. You will need a credit score of at least 620 to qualify. A conventional loan does not have the upfront funding fee. Conventional loans have what's called PMI, private mortgage insurance. It's basically the same thing as the MIP for FHA. But with a conventional loan, your PMI will typically be a lot cheaper than the mortgage insurance on an FHA loan. This monthly mortgage insurance is very dependent on your credit score. The better credit score you have, the cheaper your monthly mortgage insurance will be. Also, with the conventional loan, this private mortgage insurance will fall off once you get to an 80% loan to value on your loan. Also meaning that if you did put 20% down or more on your home when you purchased it, you would not have that monthly mortgage insurance. One other item worth considering, with an FHA loan, your appraisal process is going to be a little bit more stringent than with a conventional loan. FHA appraisals are looking for any type of safety issue that could come into play. Even chipped paint or rotting wood, no straps on the water heater. Things like that will be a problem for an FHA appraisal. Best practice, have your lender run numbers for both the FHA and conventional loan. If you do plan to go with FHA financing, make sure that the property you're looking at is FHA approved, and talk with your realtor. See if they have any red flags about the property as far as the FHA appraisal goes. Again, my name is David Walterman. All my consultation calls are free. You can find a link in my bio that will take you to my website where you can find my contact information. Let me know how I can help.